or so. So based on the monetary policy rate in practice as at the issue. So plus or minus, we'll see that the total exposure here is about 1.1 million under the Finance Act. Now, if you look at it under Pre-Finance Act, the first month for not filing, the man will pay 25,000 naira, and subsequent month is going to pay 5,000 till the end of the year. Total is going to pay 70,000. Then the 70,000 compared to 275,000 is a big difference. Then for change of address, for the change of address, if you look at the penalties here for change of address in the initial act, you will notice that you are going to pay 5,000 for change of address for not notifying the revenue. And subsequent months, your company will be sealed up. Of course, there is a process of sealing up the company, but the first month you are going to pay 5,000. So again, if you apply the VAT based on the former VAT rate of 5%, you will get 75,000. Then the penalty of 10% of the 1.5 million, you will also get 150,000 and interest of 270,000. Now, looking at 270,000 compared to what we have as 1.1 million or thereabout, there's an increase of 94% in what you are paying. And this is revenue generation from the government for a taxpayer negligence. So it's very important we try to let our clients know that, although it looks as if uh, it's beneficial, Finance Act has helped a lot of businesses, but for you to benefit more from the Finance Act, ensure that on a monthly basis you file your tax return, except you are 100% your VAT return, except you are 100% sure that your turnover will not meet 25 million. Even at that, you must not be carried away, because your company's income tax return must be filed. And if they notice that a small business, you are not exposed, they want to get you from other means. So you need to prepare your clients better. Okay? And your CIT and education tax return must be filed. Even though it's new, you must file it to avoid penalty that will come due to, oh, I'm a taxpayer, I'm told not to pay, I'm not paying tax. The fact that I'm not paying tax does not mean that you will not file your tax return. Now, let's look at the maximum exposure. Now, let's assume that this company has not been kind of filing return from January to date. From January to date, it has not been filing tax return. So we have this exposure that will be calculated cumulatively to be compounded for the company. This exposure that will be compounded for the company, and again, this scenario up here is under the Finance Act, and this scenario down here is Pre-Finance Act. So we have those exposure uh, computed here. Okay, so we have such scenario. Now I'll quickly explain this so that clearly we notice that exposure now will be calculated cumulatively. Okay, so and not on linear ground. Now, so you see a company that has not been filing tax return from January to December. In January, for instance, is not due, but your tax payment the first month, you will pay 50,000 in the first month. Then subsequent months, that is March, April, May, June, July, you pay 25,000. So for this transaction, I'm highlighting, you are paying 300,000. Now, in February, the transaction of February, you did not file the return in March. So in March, first month, you pay 50,000. April, May, June, July, you are going to pay 25,000, 22,000. So it should go like that, like that, like that. Total amount you pay 1.925 million. So, but under the Pre-Finance Act, the same synology, the first one is 25,000, subsequent month is 5,000. First month 25,000, subsequent month is 5,000. Total you pay 550,000 in a year for if you are negligent for the entire year. Just for filing, no, not the VAT and the penalty for non-remittance. I'm talking about filing penalty. But looking at those two scenarios, you could see total penalty has increased by over 250%. Okay, so these are scenarios that you should take note of, to see the exposure. So you need to see this so that you're able to advise your clients better in terms of uh, improving their tax culture and not to be carried away, not to be carried away by not to be carried away. So it's very key that you understand these scenarios. So quickly, for you to avoid this, share with you. I'll quickly share with you. Uh, I'll quickly share with you the the tax filing that we have in place. I will share with you the tax filing that we have in place. So, for you to file your tax returns. Okay, so I'm admitting other participants. That's why sometimes it's noted that I've paused. So, I will share with you a slide now, quickly, after we've done this analysis. So, you will notice. Um, uh, so, I'll quickly share with you this slide. So this slide is on filing of tax return. And when you file your tax return properly, what's going to happen is that you will avoid, there are some tax penalties that are avoidable. So that's a simple tax planning method. You know, when uh, so that's a simple tax file planning method. So basically, it's filing a tax return is a powerful tax planning method under this. You think it's not a regular I want to go and file. If you are filing, you are saving the company more. You are doing more savings for the company now than before. You will see that the penalty now has increased. So the singular action that you are doing of monthly filing, you are doing more savings for the company. So do that more. So we'll be looking at not all the taxes. We know we have transfer pricing, capital gain tax, petroleum property tax. We are looking at, for this our training, we have module one, module two, module three. We are looking at the basic one, when it comes to filing. We are looking at the corporate income tax, uh, value tax, withholding tax, personal income tax, the basic taxes. Okay, so we'll be looking at the objective is understand the time tax returns, understand filing of tax return, types of tax return, and procedure for tax return filing. That's what we are looking at in this slide. So basically, we're looking at what is tax return. Tax return, we have entrepreneurs in this program, and we also have tax consultants, we have chartered accountants here, and the like. So basically uh, we are using a balanced language in our communication because of this is an open forum that is made up of accountants and non-accountants. So our language is kind of a bit simplified. But of course, uh, we have some sessions that are very detailed in terms of accounting and tax. Okay, so filing of tax return is a form of communicating to the tax man or the tax office or the tax authority, the transactions you've done for the year, and you've paid your tax from them, and you are notifying them that this is the taxes I've paid. So it's not enough for you to pay your tax. The tax man wants you to let him or her know, or the tax authority wants you to communicate. They want communication. That's what they call filing of tax return. So you need to communicate. Filing of tax return filing of tax return for various taxes with tax authority is a legal obligation which must be fulfilled by every taxpayer. So taxpayer has the duty to file return as required under the required law. Okay, so the law requires you to specify the type of return, the nature of the information required, as at the frequency, the manner in which the return should be filed. Now, on the other hand, the tax authority has the duty to facilitate the process of filing of tax return by providing a taxpayer with the standard form, guidance, and procedure. So basically, we have both manual filing and e-filing. So the two is running concomitantly. So you can always go to the tax office, apply, update your tax profile form, or apply, for e-filing. Then you'll be given the login detail you will set up for e-filing. Okay, although there are still some hiccups in the e-filing system from what I've noticed, but it's progressing. There's an improvement. And again, usually for a lot of small, medium-sized tax office, we still have manual filing going on there. Of course, for large tax offices, e-filing is doing well in that access. So, of course, the aim is whether you are small or medium, you have access to e-filing. Okay, so gradually, as the e-filing is perfected, I'm sure that that's the future of filing. So, meaning that you can log on to the system, upload all the necessary documents, and at any time you can retrieve them. It makes the work easy for the tax authority as well. Why it's also easier for the taxpayer. So both will benefit from tax filing. So you need to communicate about your taxes, that you prepared your account, your capital allowance, you've done everything, and you've paid your taxes, and you're notifying them about what you've done. So basically, we'll be looking at the filing of tax return is the submission of tax return by a taxpayer to the relevant tax authority in a manner prescribed by law and in accordance with the laid down administrative procedure. Okay, so I've explained to you that the submission of the tax return. And before I proceed, I'll let you know that all our previous videos and lectures are on our website. Okay, and you can watch them because there are some very powerful and insightful lectures we've done in the past that you can get from our videos. You can also check www.obinamadabuchi.com and navigate through the website to our e-learning site. And those that in the school, they have access to the e-learning site. So if you are here and you want to also watch our previous session,